How's it, everyone, and welcome to this edition of the SA Crypto Market Analysis with myself, James Preston.
And myself, Graeme Tennant.
And this edition is post-Springbok win.
Absolutely.
The Springboks did it, England did it. Can you believe it?
Fantastic stuff, eh?
So, Rugby World Cup, here we come. And let's see if the Rugby World Cup's going to be as exciting as the crypto markets the last few days.
Nice to see it. It has been a bit of a rough ride.
It's been unbelievable the last 3 days. Literally, we publish last week's analysis. It's looking bearish. An hour later, boom! Look at that green candle. So we thought, it's a Monday afternoon, we thought we better get something in here quickly because we're literally up, if I recall last week, I think we're up $1,400 from last week's episode, which was recorded.
Sounds about right.
Which was recorded on Friday. So we thought we'd do this one very quickly, very early. Let's talk about what's happening. I mean, we're sitting at $9,300 at the moment, Graeme. But my question to you is, does this mean our downward trend is now invalidated and the trend has reversed? Or do you expect that downward trend to continue as time progresses?
Yeah. Cool. So, I mean, as you said, it was an exceptionally powerful move to the upside, and one that I didn't see coming, as you would have known if you had watched the episode last week. But, I mean, to your question, are we now re-looking at a bullish trend? I think it's too soon to call. So what I've done here is I've zoomed all the way out to the monthly chart. So each candle here represents 1 month of price action. So I find that helpful when you do have a big move like this, just to put things in context.
Right.
Because often, when the price starts to move sideways and the volume contracts, you go into a closer time frame, and then next thing the thing's almost off your screen, and you have to kind of recalibrate again. So that's what I've done here. We're on the monthly chart. And this does put things into perspective, because you can see here that 10,000 is acting as your real strong level of resistance now. So that's really the level that we need to push through to call this a bull market. And you can see that if you look at this sideways to down movement over the last couple of months has been a consolidating period after we had the big upward move from the beginning of the year. And I think that your most likely outcome is a reassertion of that bull trend, and that's what I was pointing to. Although I did expect the price to come down a little bit lower before we saw that happening. So I think that puts the bigger view into perspective. And one other thing I'll point out here is these wicks. Can you see the wicks at the top of each of those candles? So that shows the selling pressure. So the price has rallied really hard up to the upside and then got beaten down with quite a bit of force. And we've seen that almost every single month. Okay, so we can't get too excited yet because we can see that the sellers are still there. As long as those wicks remain, that means that there are sellers at those levels, and we really need to push through that selling resistance in order to reassert a really strong bull trend, which should hopefully see us challenging those highs of 2017. That's really what we're waiting for, to try to take out those highs and enter into new territory. So I think this is almost a winding up period to give us the momentum to push through to that type of scenario. I'll zoom in a little bit closer to the weekly chart here. And here you can see how strong that 10,000 level was. Yeah. That's really pushed us back into the area that we're at the moment. So that's how I'm seeing things right now.
Continuation of the downward trend, though. I mean, you drew some patterns before we went to recording of what looked to be a bit of a continuation before breaking out of that. Just take us through what you saw there.
Cool. All right, so I'm going to draw two trend lines here. And this really is showing, I'm going to go a little bit closer onto the daily chart, what looks to be like a descending wedge. Okay, and that is generally a bullish pattern. But we do need to break to the upside of this with a little bit more conviction to get out of this structure properly, and then we can really get bullish. Okay, but until this point there is a chance that we pull back. So I'm going to run through 3 broad scenarios, and I'm not going to win any points for making a correct prediction here, because I'm going to give you kind of all the possibilities.
Okay, well, that's fair.
And that really, I think, speaks to my uncertainty right now, because I was looking for a lower price. I think it was a really almost unpredictable event, this really strong move that we had up there. So yeah, this is the way I see it. So we could get, I think the most bullish setup is that we have a little bit of a wind up here, and we have kind of like a flag structure with a strong break up to the upside after that consolidation period is over, and that would see us push with momentum through that 10,000 level. So I think that's your most bullish outcome. Your other outcome that you could have is a pullback back into this wedge structure. Just give me a sec to get my tool. And maybe we find support around about the 8,500 level, because as you can see, our volume indicator is showing that that is where there is some significant support, and we move to the upside there, or we move a little bit lower and retest the bottom of this wedge structure. And they would also see us finding support at that 6,800 level, which is the level that I was very keen on finding support and loading up again on the bases before we then reassert to the upside and push out of that structure. So I think that's scenario 2. And then finally scenario 3, which I think is probably the most unlikely here, is that we fall out the bottom of this wedge structure. And like I said, typically your wedge structure is a bullish pattern, so I think that's a lower probability, but still one that we need to keep on the cards. So that's really how I see things at the moment. But I think don't get too excited about these green candles right now. I think that's one thing I would say, because there's the potential for a bit of a pullback and maybe a little bit of a rest before we move to the upside again.
I think a lot of people are actually quite sad, to be honest, because
they didn't get the opportunity.
People were looking forward to accumulating.
Yes.
So to see that bullish move, and that I'm sure would affect people's psychology in terms of now their bias is going to be bearish because they want it to go back down into their buying zone again. So that's where it's so important to remain neutral in your analysis.
You have to, and if we do break out to the upside of this wedge, that's when you actually need to have your finger on the pulse to be able to buy in before we really start to move to the moon, as they say. So by the time we're at 20,000, the horse is bolted, and it's too late to buy in at that stage. So if you are looking to cover your bases and you are a long-term accumulator, buy a little bit at this level. If it drops a bit, buy some more. So phase your investment into the market. That's generally the most solid advice I could give for long-term accumulation.
Sure. And just your thoughts on possibilities. I mean, those kind of candles do indicate that there are some big players in the market. Some guys sitting on millions of dollars with APIs plugged into the various big exchanges, your Coinbases, Binances, Bitstamps, etc. Perhaps even your Lunos, all ready to pull the trigger, pump a bit of money into their accounts and pull the trigger on some buy orders. Is that a likely possibility?
Almost definitely. I mean, those type of programs obviously exist and assist large investors to get into the market, as well as the OTC market, and that is an obscure market for participants on the various exchanges, because we don't see that type of price action unless you have direct access into what's going on in the OTC market. But that's where your big deals take place, and then obviously that buying action then filters into the exchanges over time. So I think as the market develops, it should become more transparent. More liquidity would stop these type of big spikes happening, because the market can absorb larger investments, larger buy and sell orders. So, but until that stage comes, we need to expect this type of price action to take place, and obviously protect ourselves against it, and where possible take advantage of it.
All right, well there we go. Graeme, thanks so much for this analysis. Much appreciated. Guys, email us your questions, james.preston@sacrypto.co.za, and we'll gladly try and take them for next week. This week we really didn't have time for a question, neither did we last week, so apologies for that. But Graeme, thank you again. It's Monday now. Who knows what happens come Friday?
Absolutely. So we'll keep our eyes on the charts now.
Let's do that. All right, well, that's it for this week's episode. From myself, James Preston.
And myself, Graeme Tennant.
It's goodbye.
Cheers for now.
SA Crypto is not a registered financial advisory, and the information provided in this market analysis is for informational purposes only. Each audience member is responsible for their own financial decisions, and SA Crypto cannot be held responsible for any decisions made by those within its audience. SA Crypto strongly encourages all audience members to consult a professional and registered financial advisor before making any financial decisions.